Welcome everybody, and thank you for joining our webinar about inventory management. My name is Beth Williams and I handle the marketing and business development for COMBASE USA. Let me just give a quick introduction for those of you who don't know COMBASE yet. COMBASE was founded in Germany and has been developing successful point-of-sale software solutions for about 18 years now. During those years, we've developed many custom solutions for retailers, which has had a strong impact on our current products and has taught us a lot about retail operations. Today, I would like to share some of our experiences regarding inventory control. We will start to talk about the impact of bad inventory management. Then I'd like to explain a few KPIs or key performance indicators and how you can improve your business by knowing those KPIs. The grand finale will be how our point-of-sale solution, KORONA, can help solve a lot of the common inventory management problems. So why do inventory management? Well, statistics show that more than 50% of businesses fail during the first 4 years. One of the top 10 reasons is none other than poor inventory management. This is one of the best ways to start improving your business. It's in your full control. You can't fully control your customers. You can't really call the customer to come and buy your stuff, but you alone can decide fully what you're ordering and how much you're ordering. Poor inventory management can cause you to run out of stock, to be overstocked with slow-moving items, to have dead stock, which is wasted capital, wasted storage, and hard to get rid of without losing investment. So let's talk about how we can prevent those issues and what numbers we need to pay attention to. I won't go into too much depth for the calculations, but you should be able to find these numbers in your reporting, and I'm going to explain what those key performance indicators are telling you. So the first and best known indicator is the number for days of supply. It tells us how long we can keep selling a product. Since this is a prediction, we will need to forecast the sales. We will also need to get detailed information about the current stock, because even if we knew the exact sales for the future without knowing exactly what we currently have in stock, we won't be able to predict how long it will last. Estimations about current stock should be avoided whenever possible. Since this calculation already relies on one estimate, the sales forecast, adding another estimation will make this indicator less reliable. And lastly, when using the days of supply indicator, it's important to be aware that most systems are simply using the average sales during a certain time frame to get your result, and don't take into account seasonal changes, holidays, or other occasional events, so you can't fully rely on this KPI in those instances. Okay, the second key performance indicator that I like to talk about is the turn. The turn tells you how often you replace your inventory. Doesn't equal the amount of orders you have placed, but it's influenced by that. The turn is calculated for a certain time frame, usually that's a year, and in most cases you would use all the sales for that year and the average inventory to calculate the turn. Okay, the next interesting key performance indicator that I'll tell you about is the sales to stock ratio. It's going to tell you what portion of your inventory you're selling. So for that calculation you're going to need two numbers, the number of items you've sold and the number of items you had in stock. Usually this is calculated by day, and you can get this number also for a time frame like a year. In that case, you're just going to use the average numbers per day. The share of sold inventory is going to increase as your stock decreases, and the number can also give you a prediction of your days of supply. So if you pass 50% for a day, for example, you've either had an outstanding sales day or you will be out of stock the following day, or both. And the last KPI on my list today is a GMROI, and it's probably one of the most intense indicators. The acronym stands for Gross Margin Return on Investment, which is a long name with a short meaning basically of how much do I get out of it. The scale in this case, as you see on the slide, is how many dollars profit do I get per invested dollar. And essentially it's going to tell you from a pure accounting perspective which products were worth the investment. So there you have it. Those are already our favorite key performance indicators. Now I think we should talk about how we can use those indicators and accelerate a retail business. Well, an easy way to start with this is to decrease the days of supply on a constant basis. May not apply to every business and every item, but it should definitely be a general pursuit. So decreasing the days of supply can be accomplished by decreasing your reorder level and the maximum stock level, which simply means to order later and order less.
But you don't want to overdo it either. So this improvement can only be done to a certain extent, otherwise you might be losing sales, which of course is not what we want. Well, of course, getting more return on investment is the most basic concept of doing business, and I'm probably not telling you anything new to say that you can accomplish this through increasing your margin, which can be done by buying items for less or selling them for more. But another way for improvement here is to also increase the sell-through rate. Well, this can be conflicting with buying the products for less, and most vendors offer better prices if you purchase more. But those deals can end up in dead stock, which can cause you much worse results. So always keep in mind that bulk discounts can cause you to end up with dead stock. And for those of you who are big fans of bulk discounts, just imagine you're having to turn down an amazing bulk discount because your warehouse is already filled up with dead stock. Another way for improvement is your product selection. This means to identify which products are worth selling and which ones aren't. And the first KPI that you can use to identify those is the gross margin return on investment. Although products which don't have a great return on investment aren't necessarily what you want to get rid of right away, you still have to identify products which your customers like and keep those. Also, you should pay attention to products that are most commonly bought in combination with your top selling products. So not having those products anymore can decrease the sale of your top items. Let me give an example. So for example, let's say you sell popcorn, which has a great return on investment, and the most commonly bought item with popcorn is soda. You should probably keep selling soda as well because people might be looking for both in combination. And if you don't offer the one anymore, it could decrease the sales for the other. But you have to be aware that all of these calculations and all of these key performance indicators need to be based on accurate ratios. So if your system and your workflows don't currently allow for this kind of accuracy, then that's really where you need to start, by using a professional software to track every step. And don't worry, I have a good recommendation for you. But in addition to a solid system, you're going to need to define clear procedures. Never just put received goods into your warehouse without tracking them in your system. You're going to need to train your staff for these procedures as well and assign them responsibilities. And there really shouldn't be such a thing as untracked goods. Unless for some reason you've decided to purposely not track something, you should be tracking it every step of the way, beginning with the placement of the order. Okay, so now that we've decided we need to keep better track of our inventory, the next question is, what are the values to track? Well, during an order process, there are a few values you'll need to watch out for. One is, how much do you need? How much do you order? How much does the vendor send? And how much do you receive at your store? In an ideal scenario, these values would all be the same. Unfortunately, life is not always an ideal scenario, as we all know, so your system should be able to handle these differences and respond to those right away. This can help you to react to potential shortages before the goods arrive at your store. Alright, so now on to that recommendation I promised you earlier. For those of you who don't know it already, KORONA is the point-of-sale software family developed by COMBASE, so not the beer, notice the K. And as previously mentioned, we've been developing solutions for retailers for nearly 2 decades now. And while the cloud version is the newest addition to the family, it's based on years of experience, and the inventory management feature has been carefully developed with the help of real retailers and vendors. So I'd like to take just a minute, I promise I won't go on too long, to highlight a few of the exciting ways that KORONA can help achieve the goals that we've already been talking about. Alright, so when you're working with your products in the KORONA system, you want to activate inventory tracking for all appropriate products. And once you do that, you'll be able to view the stocks data for those products. Here's an example of what you might see. You'll get to define your different warehouses. And the term warehouses, in this case, is used flexibly to mean basically any place where you keep your product. So whether it's actually a warehouse, a storefront, or a storeroom attached to your store, you can define it as a warehouse in our system. Then for each warehouse, you would define a minimum stock level or the reorder level, as well as a maximum level. It's very helpful to be able to define these different values since store sizes and sales volumes aren't always the same across the board. You can also see here your current goods or the current amount in stock for the selected product, and also your ordered goods. So here we're coming back to those values to track that we talked about earlier. You can see in the menu that you can find the information that you need about, for example, your suppliers, or your stock orders, which shows what you've ordered and when you've ordered it, or your dispatch notifications, which tells you what the vendor is actually sending you, and then your stock receipts, which will show what you actually received. And on the next slide, what I want to show you is that a supplier is much, much more than just a name in our system. I mean, you can include a lot of information about them. So what is your customer number with that supplier so that when you place an order, they can recognize you? When you can order from that supplier, so for example, if they only take orders from Monday to Friday before 3 p.m., you'll know that if you place an order after 3 p.m. on any given weekday, you're going to have to allow for an extra day for them to process that order. Or the shipping cost, or the supplier's email, which is actually very important because the supplier email actually allows you to send your order by email to the supplier directly through the system. You don't need to print anything or fax anything, just click send and you're good to go. So I hope you get the idea. So another cool thing about the KORONA system is that it makes it very easy for you to order your inventory. For example, you can use their automatically created stock orders, which will fill in the right amount that you need to order, which of course can also be adjusted manually as you see fit. Furthermore, the system can automatically choose which container size is the best value for you. And this is so cool because it also helps to prevent that dead stock issue that we talked about. So in the example on the screen, you see that you need to order 100 Coca-Cola items, and the system determined that it was a better value for you in the end to buy the 4 boxes of 25 items of Coca-Cola rather than 3 boxes of 45, even though the per item price was lower. Now, if you don't use mobile devices to keep track of your inventory, you're probably going to be quite interested in this next slide, which is showing that you have the ability to generate a count list and print it out for doing inventory. So you can just print out the list of all the products you're tracking, take inventory, and then fill in the numbers from the sheet back into your system. So now I'm going to show you a little magic. Earlier I mentioned that you need to find out which products your customers really like and make sure to keep those in stock. Well, KORONA also provides you with the statistics you need to discover just that. So for example, this most popular statistic, which shows which products really bring in the customers. So the most popular makes it sound pretty much like it's a bestseller, right? Well, without belaboring the issue, I'm going to tell you that there are actually 4 types of bestsellers. So number 1, you have the ones that show which items bring in the biggest revenue. Number 2, you have the ones that bring in the biggest profit. Number 3, you have the ones that were sold the most, which is actually the least useful statistic, believe it or not. And number 4, you have the products which the most customers bought, which is what the most popular is really all about. So whether they bought 20 of that item or just 1, it's the item that shows up on the most receipts, which gives you a pretty good idea that these are the items that are actually drawing people to your store. So pretty exciting information to have, right? So finally, I'd like to show you the product report. The product report shows you those complementary products I was telling you about with the popcorn and soda example. So before you toss out a product because it doesn't have the greatest return on investment all by itself, you're going to want to check out its product report first to find out if any of your stronger products show up in the complementary products list. And there you have it. Congratulations for making it this far. Give yourselves a little pat on the back or treat yourself to a Corona after work. Anyways, hopefully through this presentation you've obtained a deeper sense of appreciation for the impact that inventory control plays for retailers. So you've heard about our 4 favorite key performance indicators or KPIs and how you can effectively use that data to improve the performance of your business. And you've even been introduced to a solution which helps you to do it all without a lot of added headache. So anyways, thanks again for listening along with us today, and at this time I'd like to just give you all a minute to submit your questions or comments, and I'll gather the questions that have already been submitted in just a minute. We'll start answering those.